Hello guys, welcome back to another video. In this video, I will be showing you my Robinhhod portfolio and how the stock that I own went up. And yeah, so stay tuned if you want to see that. Alright, before getting into the video, make sure to like, subscribe, and leave a comment down below. So right here, I'm gonna open Robinhhod, my portfolio, to show you the stock market that went up and the stocks I own. Right here, you can see that my portfolio investment is at $2,455.96. Perfect. It's not all the investment I did, but it did go up despite all this crazy stuff that is going on. So what I also want to talk about is how to stay consistent in your strategy and in your investment, so you can experience these gains and not only experience some losses. So let me take you back to a month ago. If you were to invest in March 10th or 11th, all your investment would have gone down because the stock market was doing horrible at the time. So if you experienced in March 10 and March 23rd, that was the worst day for me in my portfolio. In March 23rd, I lost $439. If I was to feel so emotional, so mad at the stock market because I lost $439 in what, 13 days, that's so bad. I'll be like, oh my god, I just got started in investing to make money, not to lose $400 in 10 days. This is just crazy to like imagine losing that much money, but it's just a lot of money from my portfolio.
I told you to be slow.
Shh. Get back to my video. Alright guys, sorry about that. That was my girlfriend right there. And like I was saying, if I was to pull out in this period of time, March 23rd, I would have lost a lot of money, right? And others could have lost more if they invested more. But now, if I go right now here, I'm up $22 today, and in the week I'm up $106. That's 4.54% of my portfolio. A month ago I was down, and I'm still down. A month ago, 99.84 and 3.91% of my portfolio. So in this video, I just want to talk to you a little bit about how you might be feeling about your portfolio and how you feel when the stock market is going down. So the thing to do when you see all these prices going up and down, only down, the last thing you want to do is impulse sell your share. You want to hold into your share because you want to stay consistent in your strategy and think into the long term, not the short term. So this video, I want to talk to you about. And also, instead of seeing it as a bad thing, look into the bright side and lock those low price shares. What I mean by locking your low price share is when let's say if you own, where is it at? The S&P 500. If you were to own it in February and you see this drastically drop like crazy over here from 330 from 228, almost $100. If you see this drop right here, you could see it as an opportunity to buy lower, to buy at $222. So you can see it as an opportunity like, oh my god, it's way cheaper. I'm locking the price lower. So also, you might have the question on when to lock your money. Should you lock it here, or is it going to continue going down? Should you lock it over here, or is it going to continue to go down? What you want to do is follow a strategy that works for you, that to lock it in certain places. If you have, let's say, $500 to invest, you want to lock $100 here, another $100 here if it continues to go down. Because if you wait too much, you might lose the opportunity to gain, or the stock price might recover. So that's why you want to lock those prices. And when you see the stock market crashing or going down, you want to be consistent in your strategy, keep locking those low prices, feel less emotion, not impose sell your shares, and keep your focus into the long term. Because despite of every recession, we recover and we recover bigger. You could see by 2008, 2019, we recovered massively. We recovered so much, and you don't want to be left out of this opportunity. So this right here is just me telling you that the stock market will increase, will come back to normal. Everything's gonna end one day, and everything is gonna come back to normal. So you gotta understand, when everything comes to normal, all the people who are unemployed come back to work. All those 3 million people who are unemployed are coming back from work. All of them are gonna make money, which means that they're gonna spend money. So when they spend money, companies make money. And this also represents how the stock market might still recover from this recession. I'm not saying this is the like okay, the recession is over, the next bull run is coming up. No, I'm not saying that. What I'm saying is that we can also see some gains and experience some gains during this recession, and it's important that we lock those cheap share prices right now when we have the opportunity to keep the most amount of return when they go up. And this right here, this is proof that the stock market can still recover. Not right now, not tomorrow, probably not tomorrow, probably not next week, probably not next month, but someday it's gonna recover, and you will wish you will keep your stock to get in that spike, to get in that roller coaster going up only. Okay guys, sorry for the interruption. My girlfriend was asking me an opinion about her makeup. Please be quiet. But remember guys, super important that you don't feel no emotion when going down, and know it's hard when you see that much amount of money losing. And if right now, because of my portfolio is small, it's not that much, probably like 300, 400. Yes, I lost 400. And try not to feel anything. And what works for me is that money basically I see it for my future. So those 400, I know it's gonna go up as for sure. I know it's gonna make me some gains in the long run. So in the short term, I do not see them as losses, and I will recover from this, and the markets will recover from this even stronger. So you want to be in that role, you want to be in that path, investing right now when the stocks are low. Wait and lock those low prices right now so you could get in. It's really important that you stay focused in your portfolio and picture your gains in the long run, not in the short term. Because in the short term, your stock portfolio is gonna go up and down like crazy. So you want to stay consistent. Even though you're seeing some losses, in the future next week you're gonna see some gains, and when you see some gains, you're gonna experience some losses too, up and down. But in the long run, you're gonna be up by significantly. So you gotta stay consistent in your investment portfolios. So yes guys, just a quick video to motivate you to start investing, to lock those low prices shares. It's an opportunity if you see it as an opportunity. It's a downside if you see it as a downside. It's bad if you just focus on the bad side of it. But for Mimic Crisis, there's an opportunity, and you could use this opportunity to start investing, and also to use my link to get a free stock in Robinhhod. So I'll leave that link in the description. Make sure you get your free stock. I get a free stock. It's a win-win situation. So thank you so much for watching this video. I appreciate you, and we'll see you back in the next video with more information of my stocks, everything, and